Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for the week of March the 8th. Before I jump into the content for this video, please do me a huge favor, hit the thumbs up button. Don't forget to subscribe to the channel, and also don't forget to click that bell icon to get notifications when I release new updates. So guys, it's been about a week since I did my last video. A lot of the stuff I talked about has actually come true, and I've been keeping the Patreon group, which of course is brand new, I've been keeping them more updated. So if you want more regular updates, if you want more frequent updates, make sure you join that Patreon. You can find a link down in the description. It's less than $5 a month, guys. It's $4.95, so it's like a cup of coffee. And I did that on purpose. Some people said, hey, you should be charging a lot more. I don't want to charge a lot more. I'd rather have thousands of people paying $5 a month, and that way I know that I'm giving them, tons and tons of value that's a no-brainer for them. So I'm going to start out by talking about the weekly chart, and then we're going to zoom in on the smaller time frames. We're going to talk about some altcoins today. Also going to talk about some impact that I think the stock market may have on crypto. So on the weekly time frame, last week I said that I felt like, before going down further, we'd probably get some type of pump, maybe as high as 9 grand or even 9,200. In fact, the pump reached 92.14, so I was off by about $14. And then I said that I felt like that we could possibly end with some type of doji candle, which is kind of what we're seeing now. This RSI did turn back up, and it's hard to see it now because it's already pulled back down. But when this price was up around 9,200, this was sitting right on that green line, which was the bull market line from 2015 through the end of 2017. So it did in fact act as resistance. That's why I had the hammer here, right? It acted as resistance, it rejected it, price started to fall, and RSI curled back down. So that was a feather in the cap of the bears. And now it's going to be interesting to see if this thing comes all the way down and tests this upward sloping yellow trend line. All right, so that weekly was not what the bulls wanted to see. They wanted to see this thing, either close underneath this green line but in a strong fashion, or break through it and close above it. And it doesn't look like that's going to happen unless Bitcoin suddenly pumps several $100s over the next few hours before the weekly close. All right. By the way, guys, I'm doing this before the close because the closes are now going to be about 7 p.m. my time, and it's going to be kind of tricky to shoot the videos that late, edit them, and then get them out to you at a decent time. So I'm shooting this a little ahead of time. All right. So keep in mind that this weekly candle obviously is not closed. But that's what I'm seeing in the weekly. Right now, it looks like this is probably going to come down and test this yellow line. Before anybody gets too overly bearish, please keep in mind that this isn't necessarily macro bearish, okay? If you look at this with some Fibonacci levels from the bottom to the top here, we still haven't reached the golden zone. So again, that $8,000 mark could still hit that and be bullish in nature. In fact, if you look at this, again, that would just be that inverse head and shoulders that a lot of people, have been hoping for, right? Come down to this $8,000, $7,800 area. I drew that a little too far down. All right, so come down like right around 8 grand, and then possibly bounce off and pump into the halving, right? Which, by the way, is less than 2 months away now. All right, so we could get something like this, absolutely, and that would make sense if it comes down and hits this yellow line and then moves off of it. That would be bullish in nature, and I would probably be looking to take some longs at that point, depending on what else was happening in the charts, obviously. Okay, so not bad news at all. In fact, if you look at this, you had your low, your lower high, your lower low, your lower high, your lower low, your higher high. This could very well end up being a higher low and then more upside. All right, so weekly, there it is. Let's take a look at the daily chart. Now this thing is even more clear. I'm going to get rid of, actually I want to leave it there. All right, sorry, this is a 3-day chart, not daily. But basically what we had on this, we had several different lines to keep an eye on. I was watching more RSI than I was price, okay? And again, this RSI has just been crazy accurate. So we came down, here, this was back in February. I talked about this in the last video. We had this bearish retest and then a collapse of price. And what I was watching for was what happened when this got back up to this top of this bear market box, which is the red line here, and also this downward sloping yellow line. They basically had, they converged on each other right here. It touched it, it failed, it collapsed, okay? That was this green candle here. It closed right at $9,158. And then when the March 7th candle opened, boom, price collapsed right back down to this blue line, which has been, you know, kind of a support slash resistance. Put this tiny little tail in, had the hiccups. It put this tiny little tail in here, and so far it's bounced off of that blue line. So going to be watching that with quite a bit of interest. On the 3-day chart, this is putting in bearish structure. We've got a low, we've got a lower high, a lower low, a lower high, and a lower low. So keep that in mind. This is in a downtrend on the 3-day chart. Okay, so we need to see it reverse before we get too bullish. And if we jump over to a daily chart, you know, this, by the way, the short was pretty easy to take, guys. You know, the short back here I talked about, this long was off the trend line, and then this short up here, I actually think I talked about this, I was going to say in the last video on YouTube, but no, it was on Patreon. Okay. So basically when this price came up here, what we were getting was a bearish retest of this line here. This was the upward sloping trend line on the daily. This line went back to November of 2019. Right, so price was telling different stories. Price right here gave us a very clear entry for, you know, a bearish retest, easy short to take. The downward sloping trend line from 2017, the upward sloping trend line from January, right, easy short. Down here, this was the trend line, the price trend line from December. So this was a long position that some people might have taken. I did not take it because I felt like we were in a downtrend. I didn't want to fight that. All right, so it bounced there, and then up here, if you're just watching price, it was a little bit confusing, right? 9,200 was not that hard to short, but if you really look down and look at RSI, it was a very, very easy short to take because you had a bearish retest here, okay? Now, full disclosure, my mistake was I didn't hold it long enough. I took a smaller profit on it. I didn't expect it to collapse this hard that fast, but it was a bearish retest, came up for this perfect touch right here, and then poof, right? Down it went. In fact, last night I came very close to longing this thing down around this level, so I'm glad I didn't. But yeah, dropped down over $1,000 from that bearish retest. Been some really, really good trade opportunities if you played this thing as a bear the last couple of weeks. Okay, so that's what the daily looks like. But again, you know, I talked about this for the last month. We've cut through this trend line, we cut through this trend line. So now what we have to see is, you know, what happens when we get to this trend line, if we get to that trend line, okay? We could come up for a bearish retest of this before further downside. It's tough to say. You know, this big move down like this, it left a huge gap on the CME, which we'll talk about in a minute. But essentially, I'm going to watch. If it breaks back above this line, that's going to be bullish in nature. If it can close on daily above it. If it can't, then I'm going to be watching for it to come down to this trend line here, which is actually the trend line. I'm going to turn volume off. This is actually the trend line that goes all the way back to February of last year, okay? And that would actually make sense because if it did come down to this line, it would probably come down to this yellow line on RSI, which is the line that goes back to November of 2018 on RSI. So it could come down and retest that. Again, as long as it finds support there and starts to move up, it would be very bullish in nature, okay? If you look where that trend line is, it's right around this area here, okay? Now we had this outlier here, but basically this would be the bottom of that inverse head and shoulders, right? Could get something like this. Comes down and tests that horizontal line and that sloping line. Plus, if we draw our Fibonacci levels, if my magnet doesn't get carried away here, look at this. That's right around, just below that 61.8 fib, you know, down around probably 67, 68% retracement, somewhere in that ballpark. So again, could do that and be very, very bullish in nature, okay? I don't want to give you a macro bear picture, but also it's important to realize that on a daily chart, this is in fact in a downtrend like the 3-day, right? You had your lower high, your lower low, your lower high, your lower low, your lower high, and this is putting in a lower low. That is a confirmed daily downtrend. If we look at the 200 and the 50, this thing has just been really wrecking people because they put too much faith in this golden cross. And what happened after the golden cross? Nothing good, right? The golden cross occurred back on February 18th. And since then, from wick to tail, price moved down over 20%. Not good, right? The other thing that looks really bad here was this actually came up, almost looks like a bearish retest of the 50-day moving average. And now it's collapsed and just sliced right through the 200-day moving average. It did not hold up, okay? So what I want to do now is I want to move over to the CME chart. I've got some theories I'm going to share with you. So this is the CME chart. I talked about this on Patreon a few days ago. This is the 200-day moving average. This pink line is the 200-day moving average in the CME. It is different from the 200-day moving average in the regular charts. In case you don't understand that, very, very different. 200-day moving average in regular charts, it's got a hard curve down. It's sitting just under 8,700 bucks. The CME 200 is actually still sloping up slightly, and it's sitting right around 9,200 bucks. This looked like a bearish retest of the 200 on the CME. Also, we had tweezer tops on the daily, which is a very bearish sign. So again, posted all that in the Patreon, okay? So the CME closed at 91.65. Now we've got price sitting way down here at 82.77. So let's draw this up real quick. 82.77, turn my magnet off. That means depending on when this opens, or excuse me, where this opens at, it's going to open somewhere in the ballpark. You know, if it opened now, which it opens, actually, daylight savings time happens, so I think it opens, I'm not sure. I'm going to have to look it up now. It was opening at 4:30 Central Time. I don't know if that's going to move to 5:30 or if it's still going to be 4:30. I'm going to have to check into that. I don't trade the CME, so it doesn't matter that much when it opens, but I like to keep an eye on it. So, yeah, okay. So it's going to open soon. We'll just put it that way. If it opens soon, it's going to open somewhere around this area, and we're going to have a freaking massive bull gap, okay? Okay, not sure why that did that. There we go. It's going to look something like that, which means that I don't know what the hell is going to happen, okay? If this was reversed and this was a bear gap, I would be looking to short it, right? Or at least definitely not long it. And same applies here. I don't really want to long Bitcoin at this level until I see some structure form, but I really don't want to short it either because we do have this huge gap. It is a bull gap, meaning that price it will want to move up and fill it in. It doesn't mean it will move up and fill it in, but usually that's what I would expect to happen. That is the largest daily gap I think that has ever existed on the CME for Bitcoin, right? What are these back here? 9,000 down to, $400 or $500 is kind of like the largest. And this thing is going to be closer to like $700. So pretty freaking massive. And I'm a little bit skeptical that I want to bet against that. Okay. The other thing to notice, guys, and this is one of the things that makes Bitcoin a little bit tricky to trade is we have all these different exchanges, right? They all have different volume. They all have different prices. And sometimes it's hard to figure out, which one is dictating the market. And when you look at like Coinbase or you look at like BitMEX or, Bittrex or Bybit, any of those, the volume has not been that great on this rally. But if you look at the CME, right? If you really look at the CME, this rally has had massive volume, right? Respectively, right? Relative volume. And this sell-off has actually had trash volume. And low volume pumps typically mean it's a false rally, and low volume dumps typically mean it's a false dump. This is actually bullish in nature. Okay, this low volume sell, that's bullish in nature. The problem is I really don't know, and nobody knows who's dictating the market, because on the flip side, when you look at the daily, right, this was a low volume pump. And there's actually more sell volume, or equal sell volume, right? There's not a lot of volume going on in these regular exchanges. Strange. It's really strange, okay? So we had this high volume back here. That was one of the reasons that this looked like a legit rally, okay? Overextended rally, but, not a fake rally. But this back here looks skeptical, right? It's really weird. So I'm going to continue watching it, and hopefully over the next 6 months or a year, we really get a clear picture of who's dictating the market. Is it the CME or is it the spot purchases? Okay. But yeah, definitely keep in mind that there's going to be this massive gap, and I don't know what's going to happen. It's very, very hard to even take a stab when there's a gap like that sitting there. Okay. So I wanted to share that with you guys. Now, the other thing I want to talk about before I go into the altcoins, before I go into total market cap and all that, I want to talk about the S&P 500 because there was this narrative being pushed on the crypto world that Bitcoin was a safe haven and that if the stock market crashed, that could be what propelled Bitcoin to, you know, $1 million per coin or $100,000 per coin, et cetera, that it's going to be a safe haven. Guys, that you have to understand, and this is critical that you understand this. Bitcoin has only existed during a massive bull market in the stock market, right? Bitcoin came into existence right after the last financial crisis, and the stock market has been on a historic run ever since. So the entire time that Bitcoin has been moving up, right, so has the stock market. The stock market is moving up, right? If you go back to 2009, back in March of 2009, from there to where it's at now, it's up about 347%. This is the S&P 500, all right? We do not know how Bitcoin will act in a recession, you know, and people were making all these assumptions that it would, you know, go up. But I think that it's very dangerous to assume that, because what we saw last week, okay, was we saw, this is a monthly chart by the way, but if we put it on a weekly chart, when we saw the S&P dump because of this coronavirus scare that's going around the globe, right, the stock market reacted to that and it dumped hard. When it dumped hard, so did Bitcoin. In fact, it went down almost identical amounts. The stock market went down around 14 or 15%, so did Bitcoin, okay? Well, here's something that I want to show you guys, and you guys know that I'm an RSI guy. That's my favorite indicator. I love using trend lines with RSI. But what we have on a monthly chart is we have a trend line that started in January 2018, had its first touch in September 2018. That's where the trend line formed. And if you draw this over, okay, it's still up for debate. It might not be a legitimate line, but if it ends up being a legitimate line, what this looks like, okay, is it looks like it's coming up for a bearish retest. Now, we just looked at Bitcoin, and we looked at what happened when these came up for these bearish retests on these RSI trend lines. Look at this, is a 3-day chart on Bitcoin. Comes up for the bearish retest, and then boom, dumps, right? This is a 1 day. Come up for a bearish retest, boom, dump. So if this ends up being a legitimate trend line on the S&P 500, and by the way, we have this nasty, nasty divergence, right? You've got your lower high in RSI, followed by another lower high in RSI, followed by 2 higher highs in price. You got triple bearish divergence on a monthly chart. So if this ends up being a bearish retest and the stock market actually does crash, and we suddenly see a recession because of the global fears going on about this possible pandemic, we may find out very quickly whether or not Bitcoin is going to be a safe haven or whether it's going to be a correlated asset that moves with the stock market. I tend to believe it's going to be correlated. But I tend to believe that if the stock market goes into a deep recession where, it starts to crash and prices start moving down, shaving off 30, 40, 50% of their value, I think that Bitcoin is probably going to have its first major recession as well. And that could be the type of event that really surprises a lot of people, right? I don't want to make price predictions because it's very difficult to do, assuming it's never happened before, so we don't know how it will react. But it could be the type of event that really, really caught people off guard, right? And so just moving back down to $6,000 or $5,000, maybe that's the event that says, hey, we're going to go back and fill in all these old gaps down at, just as an example, the old, let's retest the old highs at $1,000, et cetera, et cetera. All right. Again, I'm not saying that I'm shorting it to $1,000. I'm not, you can't trade it. It's just a scenario that I want you to have in the back of your mind so that you're not overexposing yourself, so that hey, this is a possibility, however unlikely, right? I should be aware of this. So whether you're into stocks or not, and of course I trade stocks and Bitcoin, but whether you're into stocks or not, you should be watching the S&P 500 because it is important, and Bitcoin does move with it, okay, more oftentimes than not. So you can pull this up on TradingView, and why not, okay? So that's kind of what I'm seeing there. Let's talk about small coins. Get rid of some of these charts here. Actually, before we do that, I wasn't going to talk about this, but since I got it pulled up, sure, why not? Guys, this is a chart of Cisco Systems, and I posted it on Twitter earlier because, you see a lot of people talking about Amazon. Oh, during the dot-com bubble, if you bought Amazon, as long as you held it, you got rich. Doesn't matter how much it crashed because it went up to new all-time highs and blah, blah, blah. But, that's kind of like the needle in the haystack. There were a lot of other stocks that never returned, that completely went, kaput, went to zero. And there were also other legitimate companies, right? This is where the fallacy comes in. People seem to think that it was two camps. Either they went to zero or they survived and you got super rich. There were a lot of legitimate companies that survived, but you still didn't get super rich. And in fact, many people are still underwater. So for example, Cisco Systems, right? At the height of the bubble, it was worth over $80 a share. And then it crashed down to under $10 a share. Well, if you just held it, you're still underwater. It's worth less than $40 right now. So 20 years later, you still haven't recouped your investment. So don't buy into this, narrative that, oh, well, Amazon came up and Amazon went up 500x or 1000x. So Bitcoin's going to do the same thing. It might not. Okay. Bitcoin is definitely not the best technology. Whether it becomes, the number one coin, well, it is the number one coin right now, but whether it becomes the global currency in the future, who knows? But there are better alternatives for sure. Okay. Ethereum, a lot of people think Ethereum is one of them, but just to kind of throw out a no-name coin, a coin that, people aren't clamoring about, Digibyte, right? Digibyte is a great piece of software, right? It's great technology. It's got 15-second blocks, right? Very, very fast. There's 21 billion Digibyte, okay? Am I saying Digibyte's the next Bitcoin? I don't know. I have no idea. I'm just saying it's an example of a better technology that, happens to be worth almost nothing right now. It's worth like half a cent, okay? So we don't know which one of these coins are going to be the future, all right? So let's start looking at some altcoins. OMG is not really that popular of a coin. It's one that, I have, so we'll talk about it. It dumped, right? What can you say? It came up. I was watching both the Bitcoin pair and the US dollar pair. It came up, basically retested the 50-day moving average, just like Bitcoin did, and then it dumped 21 or 22%. What surprised me a little bit about this was it did the same thing on the Bitcoin pair. It came up and tested the 50-day, had this golden cross, and then dumped. Boom, 12% versus Bitcoin, right? So that was a little bit wonky. If we look at EOS, okay, I did a video last week saying that, if we looked at the Fibonacci levels and the trend extensions, that I believe it was 316 was what I was looking for. I don't remember, so let me just draw it up real quick. I didn't draw it like that, I know. Yeah, 316 was what I was looking for. And if you look at what EOS did, right, it came down, came up. A lot of people were getting excited a few days ago, I'm sure, buying back in, thinking, okay, it's going back up. But realistically, down, up, down, up, down, up. That's a downtrend, guys, and down, right? No surprise there. Bam, chopped right through that 316 level, hit $3 exact, and then bounced. And where is it at right now? It's sitting at $3.16.6, right where the trend, target was sitting at. Will it stop there? Will it go up from there? No idea, right? No idea. If we look at the Fibonacci extensions, it broke through the golden pocket. It's sitting down in what would be a long-term reload zone if you are a long-term investor. It's different from being a long-term trader, right? Well, there's not really a long-term trader, but I'm not talking about a position trade. I'm not saying buy this on a position trade. I'm saying that there are people who invest and they're okay being underwater. They have a long-term, goal where they think this is fundamentally sound. It's going to be worth a lot more in the future. This would be the reload zone for those types of investors. Okay. Me personally, it's not a reload zone for me because it just chopped through the 200-day moving average and it's in a downtrend. I don't want to go long in a downtrend. What I want to wait for is for it to put in some bullish structure and break back above this 200-day moving average. It doesn't have to break above the 200. It just needs to put in bullish structure, right? Some type of double bottom, some type of bullish divergence on the daily, some type of inverse head and shoulders, a W, something to give me, a ledge to stand on. It is getting down here pretty deep into its retracement, but on a parabolic climb, we often will see retracements down to around 80%, which I talked about in previous videos. So if we draw a line down here, just kind of eyeball it right around 80%. Oh, shocker. Look, that was this old level resistance back here. So 279, 280, that's probably where I would be looking for some longs. Okay. Again, doesn't guarantee I'll go long there. It just means that, I would start looking for setups down around that area, long-term setups, long-term plays. All right. I'm not really seeing any good trend lines that I can kind of hang my hat on. This might be one, but if so, it's broke through it, right? So it would need to close above that for me to get bullish. Okay. So that's EOS. And I did sell about 60% of my EOS on this pump. So, I'm still holding some EOS, so it's never fun to watch it go down and losing, quote unquote, losing money. But I'm happy that I sold some and that I'll be able to buy it back, a lot cheaper than I sold it for. Ethereum, man, Ethereum getting hammered. Okay. This was a very, very easy short to take if you wanted to short Ethereum. I didn't short it. Don't really know why I didn't short it, to be totally honest with you. I just didn't really cross my mind, right? I don't trade Ethereum a whole lot. I, position trade it, but I really don't day trade it. I probably should start, right? So what we had on Ethereum, this was an hourly chart. It had this really beautiful downward sloping trend line, had this third touch here. Maybe I wouldn't have traded this actually. On this wick here, this would have been above this green line. This would have been hard to short this, wick. What you could have done on this is when it came back down and closed, this red candle, it would have closed right here on RSI. That would have been a place that you might have wanted to short it, right? And if you had, you'd be up, oh, wow, almost 14%, okay? I did sell some Ethereum back on its pump as well, so I'm excited about the opportunity to buy it back cheaper. But I also held on to some of my Ethereum, long-term investment. So again, same deal. Not fun watching it lose, hundreds of dollars in value, or I guess it's, 80-ish dollars in value per Ethereum. But, it is what it is, right? I'll buy back those that I sold when it gets down to what I feel is an appropriate level. This looked like a little bit of distribution. This looks like a bearish retest right here. And now we got further downside. So, we'll wait and see on Ethereum. I still believe that if we look at a 200-day moving average, it's sitting right inside this golden pocket here. I still believe it's highly likely that we're going to see Ethereum get down to 180, 185 at least. And if it can't hold up, if the 200-day moving average doesn't stop its fall, then I wouldn't be at all surprised to see it come back down and test that 145 to 150 area, right? Which is down around its 80% retracement and down around this resistance level, down around 155-ish. So not ready to go long on any type of position trade on Ethereum. Still waiting and watching patiently. Okay, same deal. Unfortunately, I really don't have a clear line in the sand on the RSI trend. If we draw this like this, it looks a lot like Ethereum, right? If this daily candle can kind of scoot back up over the next 3 hours and close on top of this green line, I would actually expect that it's probably going to be bullish in nature, and I might have to reconsider waiting to buy back what I sold. Okay, probably won't enter a new long position, but I may buy back what I sold. All right, so we'll be watching that with quite a bit of interest. All right, I really don't feel like we have a clear downtrend on this yet. That might sound confusing, but this up here just kind of looks like sideways chop. We have one down move, we have one up move, and then we have this down move. But again, if it pumps back up and closes above this level, closes up around 220, for example, it's really not going to be a lower low. It's just going to be a tail, right? So it's not a clear trend. It's still very, very muddled, in my opinion. Okay, just my opinion, of course. So not trading it, but watching to see if it's time to buy back my coins. Okay, let's take a look at. You know what? Let's do a total market cap chart. That's the S&P. I was looking at DigiByte earlier. This is crazy stuff. If you guys haven't seen this, you see a lot of these people who got into crypto early and then they got rich and they talk like they're an authority. They talk like they know what they're talking about. But you have to understand that if you got into crypto early, getting rich was almost a no-brainer. Okay, perfect example. DigiByte from March of 2017 until May of 2017, in 2 months, went up 133. went up 13,000, not 133, but 13,375%, which was roughly 133x. So if you bought one Bitcoin worth, which would have been about $900 in March, you would have been, you would have had over 100 Bitcoin 2 months later, and then you could have just sat on that and got stupid rich. Not robbing anybody of credit, it still took some skill to sit on it and all that kind of stuff. But again, there were people that I know, one guy in particular, he basically went out and put like $500 on like the top 50 altcoins and made an immense amount of money just because of luck. And he admits it was luck, right? So anyway, I was looking at that for other reasons. I'm not a big like Digibyte like propaganda spreader or supporter or denier. It just happened to be a coin I was looking at earlier. Okay, so let's look at total market cap. Let's look at the total, including altcoins, and what's going on here. Gosh darn, that looks nasty, doesn't it? So if we draw some Fibonacci levels, again, this is very cliche. We had the big, deep move down from June through December. And of course, this looks corrective in nature, meaning that this whole pump was actually a correction in a bear market. That's what it looks like on the total market cap. It came right up into the golden zone where you would have been, smart to short this particular asset if it was an asset. Obviously, it's not. It's just the total market cap. And since then, it's just collapsing down. So we're going to have to wait a little bit to kind of see what happens here. If we draw the Fibonacci's, from bottom to top, we haven't quite come down to the golden pocket yet, so we're going to have to wait and see. But keep in mind that there's two possible trends at play. There's, this trend could be like this huge macro trend. There's also the possibility that this is the trend, right? Something like this. And, on the smaller level, this might be what we're getting ready to see. Okay? So we got to wait and see where it finds support. Ideally, if you're a bull, what you want to see is you want to see it find support and then move up and eclipse this high right here. And then you can feel pretty good that this is probably the bigger macro trend. Okay? But on the flip side, if it doesn't find support and it starts putting in a low below here, right, which is a little premature to talk about, but if that happens, then we'd have to, consider that this is probably the smaller trend and this is probably the macro trend. Okay? So that's the total market cap there. I'm still waiting to see what happens if it hits that golden pocket. On the alt picture, man, this alts have just been destroyed. Let's see here, if we draw this from bottom to top. I got a little higher. If you want to, use the log, it got even higher, but I'm not really seeing any Fibonacci play here, okay? Meaning that it went pretty far above this golden pocket. It's easy in hindsight to say, oh, if you would have shorted there, you'd have been good. But it did go pretty high. So maybe that's just a case of the fact that this was so steep on the way down, it retraced a little harder. This still looks to me corrective in nature because it's so steep. It didn't gradually move up. It just shot straight up. So it does look more corrective, which would mean that, it's probably going to do something like this. But we'll have to wait and see. Okay. Looks pretty nasty. And remember, even if it does do something like this, markets don't move in straight lines. Normally, this was pretty straight. Crazy. But it could still do something like this, right? So just be careful that you're not getting sucked in by FOMO, that you're making sure to find proper setups and, proper entry points and all that kind of stuff for your trades. And then the last but not least, because we're over 35 minutes now, we're right at 35 minutes, let's look at Bitcoin dominance. Let's put this on a weekly, draw a couple of trend lines. So here's the first trend line. We never did make it down to it, so I'll get rid of that just so that it's not messy. And then this was the other trend line. We did chop through it, right? But we closed above it, and this week we're closing above it. That's a really bad sign for alts, which sucks for me because I'm actually holding more alts than I am Bitcoin in my long-term portfolio. But that's the way the cookie crumbles sometimes. I would say that, we're probably going to have, in my opinion, this is that triangle that I'm watching, okay? If we can't get the alts, to gain some dominance, it's very likely, the same thing I've been saying for a few weeks, that we'll go up and probably test the top of this triangle. And then what happens from there, is anybody's guess, but this is indeed an ascending triangle, which means that, strictly speaking, from a technical analysis point of view, this should break up, okay? Which means that Bitcoin will gain dominance on alts. Not what I want to hear, okay? And I'm certainly not going to start abandoning all my alt positions just because of the Bitcoin dominance chart, but I am going to keep that in the back of my mind and make sure that I'm paying attention to the Bitcoin pairs, right? So for example, I'm holding OMG. I've been holding OMG for a few years. I may move that long-term investment over to Bitcoin and then move it back to OMG later. I won't pull it out and put it to fiat because that's just not part of the plan. I always want to hold some crypto as a hedge in case the market suddenly takes off one day. But it's a small amount. It's a very small amount of our portfolio, 10-15% right now. And, again, not 10 or 15% OMG, 10 or 15% total, my crypto, like my hedge fund, okay? Most of my money is in fiat, okay, or stocks and precious metals. But right now, I am watching some of these Bitcoin pairs because, for example, I moved some of my OMG over to Bitcoin on this pump here, and, I'll move back and forth between those because alts look rough right now, right? I would highly recommend that if you are trading alts, go through and start looking at the Bitcoin pairs. Find out, are they above the 200-day moving average? Are they below the 200-day moving average? What kind of Fibonacci retracements are at play? All that kind of stuff. Because a lot of these alts, they had these huge pumps, and now they're going to have these huge retracements. Like if you look at OMG, this was almost a perfect touch of the 78.6, which again, huge pump, usually followed by an 80% retracement, and that's what OMG is trying to do, okay? And again, I'm just using OMG because it happens to be one of my alts. But the same story is going to be true for all altcoins, right? If you look at Ethereum, if you look at a Bitcoin chart for Ethereum, same thing, right? Let's get rid of volume just because it makes stuff hard to see. 200-day moving average on this thing, way the hell down here, okay? That hasn't been retested yet. When it broke through, it just ran right up. That's a 19% drop from where price is currently at. We can see the RSI is taking a pretty steep move down here. We can see that if we draw a trend line and we start connecting points, right? That one's busted through. That one's busted through. If we draw this one, it looks like, that was a trend line. It looks like a bearish retest. That one's busted through, right? So now we draw this right here. Again, is that going to be support or is that going to fall through that? And I'm drawing this fast, so it's not exact, but you get the idea. This is the Bitcoin pair for Ethereum. If it breaks through that, I may want to move some of that remaining Ethereum that I have. Maybe I'll move it back over to Bitcoin and then look to buy Ethereum back later with that Bitcoin. This market's pretty sketchy right now, and I think a lot of people are holding out hope based on one thing and one thing alone. That's, the halving is coming. Every time before the halving did this, the halving did that. But remember, every time before the halving happened in a raging bull market in the stock market, it didn't happen in the face of a stock market that looks like it's trying to start a recession. It's too soon to say that it's going to do that, right? This could pop back above it. This could all be a blip on the radar, just like December of 2018 was back here, right? Where it fell down, started looking like the recession was going to start, and then back up it went, right? Could be another one of these, all right? But just remember this, guys. All this time, the stock market was raging, and the difference is, if you had invested your money in the stock market 2 years ago, instead of getting 10, 15, 20% returns, which by the way is high, but that's what's been happening for a lot of people over the last 10 years. But suddenly, if you'd invested, let's just say you cashed out your Bitcoin, let's say you were smart, sold all your Bitcoin in December 2017, and then bought on the monthly close in the S&P 500, you'd only be up about 11% over the last 2 years, right? It's slowing down, right? It really isn't, keeping the same momentum. It's having these bigger and bigger pullbacks. So, so far, it's found support. And again, doesn't matter whether you're a stock trader or not. You need to know about this. So far, it has found support here. So that's, could be a good sign for the bulls. But if it loses this level, I'm going to be concerned with what the stock market's going to do, and I'm going to be concerned of the impact that might have on crypto. All right. So we're over 40 minutes. I wanted to do a little bit longer, a little bit more in-depth video because I am doing them less often now for the free YouTube channel. But remember, I do more often updates on the Patreon. You can find a link in the description. It's just $4.95 a month. Also, please remember that while I am a full-time trader, I am also just some guy sitting in a spare bedroom. So nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel. And again, don't forget to check the description for links where you can join the Patreon. This is James with Crypto Common Sense reminding you to please trade safe.